Hey friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened to the market in the last week and how we can plan for a better trade for the next week. And this is for the week that is beginning from Monday, March 21st, tomorrow, 2022. Without wasting time, let's deep dive into the charts and see what exactly happened. Look at this. So this is the weekly candle that you see on the Nifty. Right side you have the Banknifty also. So weekly we can clearly see that 2 weeks of wide range bullishness is seen in both indices, and it's a clear bounce up, and this bounce up is nearly more 10.5%, and this is 13% of the Banknifty. That's exactly what happened last clear bounce up. Let's get into details. So 4% of gain happened from last week alone, 660 points up. And it's a continuation of the bounce, and that bounce is from a new swing low that is created, and there is 10% recovery that we already discussed, and it is actually moved about the 50 weekly moving average, and it is resisting right now at 20 weekly moving average. So there is a double top end pattern on the weekly which is still visible at 15900. Nearby that is the neckline, and that is still a threat, right? But we have bounced from there. Now the downside trending channel that was there, probably that may be trying to break out of that, right? Bank Nifty, similarly, it's 5.4% of more bounce up further that happened last week alone. That's amounting to 1,880 points. That's fabulous up move that happened last week, and it's a continuation of the previous swing low bounce up that happened, and totally 13% recovery has happened, and it is resisting below the 20 weekly moving average and the 15 weekly moving average, right? So double top pattern still may be visible with the neckline at 3500, and the index may be trying to break ground from the downtrending channel that is there below here. So if you have a downtrending channel that is joining the lower lows and the higher highs, then you can clearly see that it is trying to break out from that, right? Probably, it succeeds or not, we never know. So we will get into details of the further price action at the last slide before we wind up, right? So daily candle, if you see, this is what happened. It's a clear bullish kicker pro gap. So this kind of gap is known as a professional gap. That's exactly what's in. Such a wide gap indicates the sheer bullishness that is there in the market during the last week. That is what is. So this is very powerful, and this professional gaps can act as very good supports. Similarly, we had a big gap that happened, and that is covered now, but the previous gap down acted as a heavy resistance, and we had to struggle for 4-5 days to break out of that. Similarly, this pro gap that is found on the upside now can act as very good support for the markets that's moving up. So that's about the daily price action. So what do we see here? Daily, it was a 1.4% pro gap. Both indices capped up 1.5%, and it is comfortably above the 20 DMA if you see on the daily candles. But the Bank Nifty, it is still below the 200-day DMA. So 200-day DMA, it is very close to that, but it can take it out. But you need to note that. So 20 DMA is cleared. So, right? 20 DMA is clearly cleared for both the indices. And Bollinger Bands, what do they say? It shows a consolidation with high volatility, because the distance and width of the bands are to the median is high in the both. So it will be very highly volatile, up and big down moves and big up moves that will happen because of the volatility. But there is a consolidation within this range, is what is the Bollinger Bands indicating on the short term. Clearly on both the indices, you can see the bands are contracting inside instead of expanding and exploding downside, right? Now support resistance levels is the daily charts for Nifty. We are trying to see, we can see that this yellow box is a clear gap, which is acting as a support. So the supports will be 17,000, 17,000, 17,000 levels. Then 17,200 also is support, 17,200 to 300 that level, and the resistance would come act as 17,350, 17,400 levels where it is hit right now, and then above that 17,500 and 7,600 also, if Fibonacci 23 levels, it will also act as a major resistance. If that is cleared, then you can see that Fibonacci 23 is on the downside, Fibonacci 23 on the upside. This level of 17500 also acts as a Fibonacci 61 percentage from the retracement from the downside. So clearing above the 15500 is very crucial. It's a confluence of both Fibonacci 23 on the downside and Fibonacci 61 on the upside, right? So 17800 and 17850 levels would be a major resistance above that. So similarly, the supports downside after the 16800, 17,000 and 17,300, that supports. Then 16800, 16900, Fibonacci 38 acts as good support. And below that you have 16700, 16750 acts as support, and below that 16550 and 650, and below that 16350, 16450, which is a Fibonacci 50 retracement support, right? So that support would be, and below that 16200, and then Fibonacci 61, which is touched upon earlier at 15900 levels. Then downside the previous swing low support at 15 near to 15500 levels. So that's all the support resistances that you can see on the Nifty. Nifty similarly has formed a very good support gap. This is also a bullish pro gap, and the support is seen at 35600, 35900, that range, right? That is also a good support. So in between that 35,500 and then 36,300, that level, that is acting as a very good support now. Now the resistance upside can be seen at 36,300 and 36,800, which is Fibonacci 38 retracement levels, and above that 36,900, 37,000 is going to be very good, very major resistance on the upside. Now 37,500 is Fibonacci 23, which is also a retracement, which also would act as resistance on the upside. Right, so 37,500 above would also be a comfortable Fibonacci Fibonacci 61% on the upside. On the downside retracement, on the downside Fibonacci 23 and the upside Fibonacci 61, right? So that would be a good zone for 37,500 above, would be a good zone, right? 38,000 also is, I think 38,000 is where the Fibonacci 61 is coming, and 37,500 would be actually the gap close. So this gap is not covered for the Bank Nifty. We can make a note that there is no gap on the upside as a resistance for the Nifty, but for Bank Nifty there is a 200 EMA, and also there is a gap that is there on the upside which would act as a resistance. But remember, it is having a good support that is created because of the pro gap that is there downside. So make a note of all these levels. Now looking at the momentum, the price momentum as Nifty is sideways, and it is almost touching the 59 points something. It's touching the bullish zones. So it's rising sideways momentum on the short term. The medium term also it is a sideways, but it is bouncing from the RSI support of 40. That is clear bullishness. Bank Nifty is the same. It is sideways momentum and rising up towards the bullishness, and also in the medium term it is sideways itself, less like short term, but bouncing up from the RSI support zones, which is clear indication of bullishness. No divergences are seen as of now. There was a divergence in the Nifty earlier, which has met its targets long back. Now Nifty trend, the trend indicator is ADX that we use. So it is DMI positive crossover has happened in the Nifty in the short term, and Bank Nifty also the crossover has happened into the bullish zones from the bearish zones. So the trend has improved. The trend has turned into the bullish in the short term, but medium term it is remaining as bearish itself with the rising strength. This is the cost of medium term. The trend has not changed. That is something to keep in mind. But short term, clear momentum and trend has changed to has improved. Right? Not at momentum is not turned to the bullish zones yet, but improved a lot and rising and heading towards bullishness. Trend clearly crossed over in the short term. So that's about the momentum. The momentum we already saw this. Right? There is no divergence, it is heading up. You can see that. This is what we are talking about. The momentum is rising, but in the sideways onwards. Right? This is about the short term or the daily candles. Medium term, we already talked. It is momentum is sideways itself, but bouncing from the bottom. Right? That is what medium term. Weekly, the charts of that is not available here. Now, trend we already discussed. It is crossed over the bullish DMI positive is what you see in the short term. On the medium term, it is bearish, which is not shown in this slide. Weeks cooled off further. 9% of cool off something happened last week. Again 11% of cool off happens, right? So that makes it weeks at 22.61 kind of levels, but 22.6, yeah, that's good. Like we had reached, remember, during the war, peak time the war may be still happening, but at the beginning of the war we had touched at the 30-31 kind of levels, right? And it has now cooled off substantially down, right, to 22.6, but still it is above 60, so you have to be cautious when you're trading. As far as trading is concerned, this anything above 20, that spike up can happen. So mean reversion has happened from the 30 now. Now it can again mean revert from by forming a range any time between, probably at 20 levels or at 22 levels. You never know when that happens. So you have to be still cautious until it cools off below the 20 levels and forms a range between 20 and 15, that range, at least. So open interest data on the Nifty futures showing that it is a long build-up. Clearly that happened on the last trading day, and also a short covering that happened in the Bank Nifty. Long build-up on the Nifty. Right. That's what futures open interest contracts are showing. Now open interest on the options, we'll be seeing that for the March 24th weekly expiry that's happening next Thursday. We'll be looking at those levels on the next slide. But before that, the put-call ratio of the Nifty and the Bank Nifty has turned bullish. So open interest put-call ratio clearly indicate bullishness. Futures open interest data clearly indicates bullishness with long short covering and long build up, and weeks has cooled off. And now we look at the levels. You can see the unwinding of the calls that has happened. So people who are taking the longs are unwinding and unwind them, and then taking long positions. Puts are getting added. More puts are getting added. Calls are getting unwinded. Right? That shows bullishness in both the indices for the next expiry. That is too early. The expiry is still 4 or 5 days. 4 days ahead at Thursday. But look at the levels. The level has got 1,300 points of range. That means the volatility is high. People are, the option writers are writing the puts and the calls very far away. Right. So that's where the highest put and the highest calls are, and support and resistance accordingly. The 7200 and 7500 also has got good support, and support put writing and resistance call writing has happened at these levels also. Right. 1.1 put call ratio we have already seen. Long build up in futures we have already seen. So Bank Nifty, the range 36,400 to 36,500, nearly 1,000 points range. It's not so that is also a very narrow range that is seen in the Bank Nifty. Right? For some reason, people think that in the Bank Nifty has got strong supports. And the second level of highest put rating and low put rating is seen at 35,000 and 38,000. That is a wider range of 3,000 points. But for some reason, for next week, as of now, the range of the highest put and call ratings remains. So a lot of straddles might have been written at this point. So what we have to assume 36,500 straddles may be there, and put call ratio is bullish. So overall, the opponent is showing bullishness with heavy fight between the bulls and the bears, and heavy support and resistance seen at a particular zone in the Bank Nifty, and a wider range movement is expected as per the open interest data between 16,000 and 17,300 as per the for the Nifty as per the options data. But make a note of those levels, right? So basically these levels give indications of support and resistance, are similar to how it gives indications based on the Fibonacci retracement and the previous support resistance that we have seen in the previous charts. So compare these two and then come up to a levels where you have to take the trade, leave the trade, take more positions, unwind more positions, and all of this. Right? Now sectorial watch. If you look at this from sectors, IT sector, almost all sectors moved up. IT sector moved up nearly 0.75%. No, it is metal so remained flat. So IT and metal more or less did not move that much because they were moving and supporting the market when all other sectors were down. But last week you can see that they are more or less flat. Although IT moved nearly 1%, and the momentum for that is sideways. Metal did not move much, but it had made big move previous week. So it's at a very critical supports resistance zone. Right? If you will be looking at the charts of this thing separately, so IT you can see that it is almost the bullish zones, and it has moved slightly up, but not make it above the previous day's high. But momentum is heading towards bullishness. It is there. So, metal clearly the bullish zones on the weekly basis. On the median term it is bullish, but daily term it is not bullish yet. There is some kind of big resistance that is at this zone. It is attempting to take away this resistance multiple times, 3 or 4 times now in the last several months. So any breakout from here that happens, it will be big move. Right? The longer the consolidation, bigger the breakout will be. Right? So keep a close watch on the IT sector. It can break out. Now look at the auto sector. It has made one of the biggest moves that happened in the auto sector, and the reality sector. 5% of move in the reality, and auto has got 6% of more. 6%. Look at the bullish candle. So it seems to have made a very good comeback. For some reason. After it had made a dip and hit the, so you can see that there is some consolidation that is happening similar to the metal in the auto also, and there is a big bounce up that happened. So what got covered in two, it's a big downmove and big recovery. So auto is still sideways momentum, so watch out for that until so bullishness, if you see, it is how it can, the nearest sector which is near to bullish is IT and metal, obviously, but it is at a, metal is at a very crucial stage, very critical resistances. You have to be cautiously bullish. You may take positions, if you like, with tight stop losses on both this, but others, the main thing in the other sectors like auto, pharma, reality, FMCG, is that they have recovered and bounced up neatly, with auto and reality bouncing up 5% and 6% kind of moves last week. Now the pharma also has shown beautiful record 1%. And the pharma also shows that the short term it is a bullish momentum, but the medium term it is yet to climb up to the momentum. So wait for that. Pharma also, pharma also can turn to bullish anytime. The moment weekly is also bouncing up, so pharma also positions can be taken, but with caution. So pharma has joined the metal and IT bandwagon. Auto has made big comeback. Metal is at a crucial position. So overall, all the sectors, none of the sectors can be clearly seen with the momentum in both short term and medium term. None of them is there as of now. Right? But IT may be reaching there first, metal may be following that if it is able to take out the resistance, and others are all, and pharma may be following that. So auto, FM, so basically it is big recovery that has happened in all the trading sectors of auto, pharma, FMCG, reality, and IT, metal, which are performing, were flat and at a major resistance zone, right? But they are ahead in terms of bullishness. That's what the charts are indicating clearly, right? Now index heavyweights, HDFC Bank, you can see it is a big bounce up, bullish candle, high volume trend, bullish. This is a weekly candle that you're seeing here. Trend crossover has not happened. Momentum crossover to the bullish one also has not happened. But big price action up move. Momentum in the medium term remains sideways, right? And HDFC also big bounce up and it has hit the resistance zone now. The HDFC Bank is yet to hit the resistance zone at 50.45 yet, but HDFC has hit the place from where it had slipped down, and it has climbed back from the bearish zones, and the trend crossover is to happen in the medium term. Now look at Reliance. This is the stock of the week. It is on the edge of a breakdown. It is a third attempt that is hitting. So there is every chance. So the momentum is still sideways. It is not climbed. So watch out for the momentum to climb and the crossover of the trend to happen. So the moment this two happens, it would be a big breakout because it's a weekly cup and handle that can give big moves. Or there is also a possibility it can come, it can slide back into the channel downslide and again move up. So that may happen, we never know. But keep a close watch of Reliance for the next week. Among the index heavyweights, then Infosys, you can see that it's an inverted hammer. Inverted hammer may be an indication of a reversal. It was a breakout from the rectangular box pattern on the medium term. Momentum is at the edge of rising, almost touching the bullish zones. Keep a watch on this, but inverted hammer may indicate there is a reversal in the trend for a consolidation that can happen, and that would mean bearish probably, right? And remember, there is an all-time high is very close by, so there may be resistance for sure before breaking it out. We may take the IT sector may take it out, but it may take some time. Some selling pressure may be there, some consolidation may happen. That is probably what the hammer may be taking. But Infosys is clearly bullish. TCS is also bullish. The bounce back well within the channel, and it's rising up towards a long way to go towards the channel top. So positional trades, may be good. The momentum has climbed to the bullish zone, that is still sideways, and the trend crossover also has to happen also in the medium term. Look at ICICI Bank, it is bounced up clearly, moved above the breakout zone, and then hit the major resistance previous support zone, which is from where it had slipped up. Now it will be acting as a resistance to climb up. So it is also giving a clear indication by good bullish bounce up from the RSI support on, and a trend crossover has to happen. So the momentum has to climb up and the trend has to cross on the medium term. Very good above average volumes, it seems. So it is turned. The moment you see that this resistance is taken away and you see a green close above that in the weekly, it means we are back in the up move on the ICICI Bank, right? But as of now, they all remain they all remain in the medium term sideways momentum. All these heavy sectors all remain medium term. None of them has climbed to the bullish onset. So Reliance may be reaching there first. Never know. Infosys may be reaching there first, but the most stocks to watch is Reliance for and the Infosys TCS for sure. Right, and Kodak Bank also is seeing a very good bounce up, taking a very good bounce from the previous support. Momentum has taken a support at the RSI 40 and bouncing up crossover is set to happen, but it may be heading towards the 19300 level where it may face the resistances, and so all that wherever it may levels are clearly marked and known to us. So all weekly charts. So that's about the index heavyweights. Watch out for IT and the Infosys, TCS, and Reliance. The institutional participation for the previous week, what happened was dramatic. It is 1,685 crores of buying in the cash that has happened from the Fyers, who are net sellers throughout multiple months. Right? There is no net buying that has happened from the Fyers since several many weeks, many weeks, and first time it has happened. And DIS as usual has also supported by buying 1,290 crores last week. So net long push long on the derivative section, the FIDA has moved up last week, unlike flat the earlier week or down the earlier week, right? So FI participation has improved, domestic institutional participation remains the same. So there is some indication of a comeback probably. Now, next is the US market. So this is where the big bounce up happens. 5 to 12% of bounce up happen in if you look at all of those major indices, Dow, S&P 500, Nasdaq, and all that, right? Big bounce back that has come, and all the previous support where it had slipped down has been recovered now. Look at this. This is the Dow Jones. You can see. Look at the candle moves. It's some 500-600 points kind of move that has happened. Clear, bounce up. Nasdaq also similar pattern. S&P 500 also same, So it is clearly recovered back all that it has lost, and it is back to the zone where it had major support zones. So the momentum is also climbed back to the sideways. So that is giving us hope also, because US is the mother market, and any drastic big moves that happen on that side will definitely have impact on our markets as well. Now, USDINR also has, you can see the dollar index is so you see the dollar index downside first. Dollar index has cooled off. That means the dollar is strengthening and taking out, and then at 99.8 it has taken a pause. It has faced resistance and has cooled off a little bit, right? It may take the resistance soon, you never know. It may take, because the momentum is still very high, right? And finally it decided to cool off a little bit and give it 9. So that cool off was reflected in the USD/INR currency pair also, but both places, remember that the momentum is high, right? Although it has slightly slipped in the sideways from the on the medium term basis, but it can, it is still at the edge of the breakout of the channel on the USD/INR. So anytime it can take out. Remember that we had the all-time high levels very close by, about 77 for USD/INR, right? So it is still at a very high level, but a big cool off has happened, which is positive in the last week, right? That is because of this commodity item, right? The crude has cooled off after hitting a 13-year high, where nearly 27% of cool off has happened in just 2 weeks, right? And last week alone it was nearly 3% of further fall down of 103 levels is where the crude oil is right now. That is what changes everything, the crude oil, right? Now gold on the other hand has done breakout, and it hit inches away from the all-time high of 2074 levels, and then that's where it met with a very high selling pressure. It has fallen back to where it had broken out from. Now we'll have to wait and watch whether it was a false breakout, or would it either is just profit booking or selling pressure, and then it would again consolidate for some time here, and then again try to attempt to take the all-time high or not. The volumes are high, momentum is still high, price patterns are still very nice bullish patterns. So you never know. right? You'll have to keep a close watch on this commodity, right? So two action numbers. One is trend. Trend is a Tata's retail arm, and that is showing very good volumes, very good momentum spike up, very good trend, and a nice double rounding pattern which is breaking out with a clear bullish candle, and it is well within the trending channel since very long time, almost 2.5 years, 2 years, right? So there is every chance that it can move further up. So this may be positional, so it may face a slight resistance once it reaches a little above the channel top, right? But for a positional trade, it would pull back and then again move up. So it is heading higher and higher, but there may be pullbacks that can happen, like you see here. But definitely, this is more of a positional trade that I would look at it, right? Or long number of days of swing trade rather. Another second one long position is Gujarat Narmada Valley GNFC is having a rounding pattern breakout. Look at the volumes, extraordinarily high volumes, clear breakout of momentum, clear uprising trending ADX indicator. So this is on a weekly candle, remember that. So daily it may be even more ferocious. So there could be pullbacks can come any moment, and that pullback may be the time when you have to enter, and not when it is heading further high. Right? So wait for the pullbacks and enter for a swing or positional trade the next week if it gives the opportunity. Otherwise, you will get your opportunity some other time. So another actionable for the next on the index trading is a very simple iron counter, where we have selling 16800 put and 16450, 17800 put and 16800 puts. That's nearly 1000 points of range, apart, selling of the put and the call that we are doing, and then we are taking hedge positions at 17800 call and 18150. So the beauty of this is that the probability of profit is 50-50 kind of, nearly 55%, but the risk reward is okay given the volatility and given the market conditions. But look at the range: 16,670 and 17,920. So it's nearly giving a 500 points of movements on both sides, which may be which may be fair enough for the next week, is what I think. So there is every probability that you can gain out of this strategy on a weekly basis. Remember that this is just a 4-day trade. Look at the required capital for that. Portion size can be done as per the capital size, and or the probability of profit is also fair, right? It is giving a very good range, and it's likely to close and remain within that range as per the volatility VIX levels. 500 points is what you can. 500 to 600 points is the max movements that can happen as per the volatility range. So that's probably something that that's worth trying out. So that is the actionable on the Nifty, and next it's a repetition of another chart of the Nifty and the Banknifty, which we can discuss if required, right? So this is a wrap up. So basically it has recovered 10% last 2 weeks. 2 weeks, 2 green bullish wide range candles, and it seems to be breaking out from the downtrending channel as on the daily, which seems to have you can see a runaway gap, breaking out of the channel probably, right? So that so the volatility has cooled off. Institutional Fyers have turned buyers. Momentum is rising and almost touching, and it is remaining sideways in short term, right? And it is sideways on medium term also. Bollinger Bands indicating its consolidation. Price action: lower high, lower low, lower high. So lower high is now taken away. If you look at in this downtrending channel, right, the lower high formation is taken away, which may be a good price action indication also. So combined overall, my view for the next week is moderate bullishness, combined with all that we have looked at so far, right? Now the US markets, after Fed rate hike that happened last week, has seen a very good recovery. 5 to 12% we already seen. That is very good, and it has a differential on market, right? So, but in inflation rate and additional Fed hikes that is going to happen, the Russia-Ukraine crisis that is still going on, the crude oil rising and the rupee weakening, all these are threats to the markets. All these make the markets very high volatile, right? That is why it is still not cooled off below 20, right? So positive factors, if you see the strength in the market, right? 10% Nifty and 13 above percent of recovery that happened both indices, just like that, right? At such high volatile and high uh, uh, poor global cues, with COVID and war and all this happening, still look at the kind of recovery that is happening, right? Now that is a strength. Now the VIX is cooled off is very good, but the VIX can spike back to again the 30 levels in case there is a bad event or bad news comes. So it is really not cooled off completely to the normalcy, right? It is still at 22.6 level, means it is still at the fear has not gone down. It can spike back to the previous levels anytime. So the fact is, the bank nifty is yet to conquer the 200 EMA. Make a note of that. Right? Medium term price action. If you look at the medium term price action, so in the short term price action, if you see, you can see the lower high low is taken out. So that is probably saying that that downward move is out. But look at the medium term. If you see, this is a swing high, 16,600 kind of levels, and 16,400 is the next swing high, lower low, lower high, and now then till that lower high is taken out, there is every chance that it can make another lower high and then it can trend downside. So medium term, that is the case with Nifty and Bank Nifty both. So the medium level price action, lower highs is still not broken, although, so that is remaining there. 200 has to be closed, and also retracement levels, right? We had been talking about the Fibonacci retracement from the downside to the upside. So how much of retracement has happened? So it broke the Fibonacci 61, but climbed back and returned from that. So anything below Fibonacci 61 is dangerous on the retracement on downside. Similarly, in the upside, if you draw a Fibonacci from top to down instead of bottom to up, top to down, if you see Fibonacci retracement 61 is at this level of 17,500 above. So anything above 17,500 only we can say that it may be a beginning of it, uptrend. Similarly, 38,000 may be the level where we can have a 61 retracement on top to bottom, is breached and then it turns into bullishness, right? Right. So that is something you have to keep a note of. So overnight risk, always have hedge positions. Intraday, stay away until it cools off, or if you're forced to do the trading in options, make sure that you have tight stop losses, right? Because volatility is at a high level, right? Option strategies and calendar spreads and all this, risk defined strategies, what we have to approach. So that's a view, moderate bullishness as of now for the next week. If that helps you to frame your view for the next week, consider hitting the like button and share difference and colleagues. We have very few subscriptions and your help in this got highly appreciable. Thanks a lot. Happy trading, happy learning. Bye.